Crypto was once the golden ticket. People were becoming millionaires overnight, and it seemed like everyone wanted a piece of the action. But what happens when those dreams turn into nightmares? The truth is, the crypto market has been a roller coaster of huge gains and brutal losses. From early investors who struck gold to others who lost it all in a single crash, the world of cryptocurrency isn't for the faint of heart. How did Bitcoin go from a few dollars to tens of thousands only to plunge back down? Why does crypto always seem to bounce back, no matter how hard it falls? Let's look into the story of how these crypto empires rise only to fall in spectacular fashion. After Bitcoin's rise came its first major disaster, the Mt. Gox scandal in 2011. Mt. Gox was one of the first big platforms for trading Bitcoin. At one point, it handled nearly 70% of all Bitcoin transactions. Everything seemed great until hackers managed to steal around 850,000 Bitcoins, worth millions at the time. The platform collapsed, and thousands of people lost their savings overnight. This scandal sent shockwaves through the crypto world, showing everyone just how risky and vulnerable the market really was. People began questioning the security of cryptocurrencies. If a major platform like Mt. Gox could be hacked, could anyone's investments be truly safe? This was the first major crypto crash, shaking investor confidence and raising fears about the future of Bitcoin. But instead of fading away, Bitcoin would prove it had more wild ups and downs ahead. 2013 was a roller coaster year for Bitcoin, packed with three major crashes. The first one happened in April when Bitcoin hit a peak of $266, but quickly dropped down to about $50. The cause? Bitcoin's growing popularity overloaded the main exchange, Mt. Gox, leading to chaos. As panic spread, prices plummeted, and investors were left wondering if Bitcoin was done for good. The second crash came in June after the US government stepped in, shutting down accounts linked to Mt. Gox for allegedly violating money laundering rules. Once again, the market panicked, and prices fell by over 60%. Finally, December brought Bitcoin's most dramatic crash of the year. Bitcoin had surged to an all-time high of $1,100, but within days it fell below $600. This time, the crash was triggered by news that China's central bank was cracking down on Bitcoin, banning its financial institutions from using the currency. Each crash in 2013 showed just how unpredictable and fragile the crypto market could be, but also how resilient Bitcoin was in bouncing back after every fall. After the turbulence of Bitcoin's early years, the crypto world saw a new craze, the ICO, initial coin offering boom of 2017. ICOs were like the crypto version of crowdfunding, allowing new blockchain projects to raise money by selling their own tokens. It seemed like anyone with a white paper and a big idea could launch an ICO and make millions. In 2017 alone, ICOs raised over $6 billion, attracting both serious investors and people just looking to make a quick buck. But the hype didn't last long. As more projects launched, it became clear that many of them were scams or had no real product behind them. By mid-2018, the bubble had burst. The value of many ICO tokens crashed, wiping out billions in investments. Regulators also began cracking down on fraudulent ICOs, further scaring off investors. This boom and bust cycle was a hard lesson for the crypto community, that just because something is new and exciting doesn't mean it's a safe investment. The ICO era left a lot of people burned, but it also led to more scrutiny and regulation in the industry. While some projects launched during this time did go on to succeed, the majority ended up as failure. Fast forward to 2020, and the world is hit by the COVID-19 pandemic. Markets everywhere, including crypto, crashed. Bitcoin's value dropped from $10,000 to nearly $4,000 in a matter of days as investors rushed to liquidate their assets. But what surprised many was how quickly Bitcoin and other cryptocurrencies rebounded. As governments pumped stimulus money into the economy, more people started turning to Bitcoin as a hedge against inflation. By the end of 2020, Bitcoin had not only recovered, but surged to an all-time high of $29,000. This crash and rapid rebound hinted that crypto was becoming more than just a speculative asset. It was starting to gain real financial legitimacy. 2021 was a huge year for cryptocurrencies. Bitcoin hit a new all-time high, breaking past $60,000 for the first time. It wasn't just Bitcoin either. Other coins like Ethereum and Dogecoin also skyrocketed. A major reason for this growth was big companies and institutions starting to take crypto more seriously. But let's not forget Elon Musk's role in this. His tweets about Bitcoin and Dogecoin made the market go wild. When Musk said Tesla would accept Bitcoin as payment, Bitcoin's price shot up. But then he changed his mind, saying it wasn't environmentally friendly enough, and the market took a dive. Elon's tweets showed just how much social media and big names can affect the value of cryptocurrencies. Prices went up and down in response to Musk's comments, making the market even more unpredictable. This year, more than ever, proved how volatile crypto could be when emotions and influencers got involved. While 2021 saw crypto highs, it also saw one of its biggest blows: China's complete ban on crypto transactions and mining. Since China was home to most of the world's Bitcoin mining operations, this was a huge deal. The ban caused prices to fall as miners had to shut down or move their operations elsewhere. Many relocated to countries like the US and Kazakhstan to continue mining. China's ban was a wake-up call for other governments. Some countries began looking into how they could regulate or control crypto markets. While crypto was becoming more popular, this showed that governments could still have a big impact on the market. Now, the question is how other countries will respond and what new rules might be put in place. Crypto's journey doesn't seem to be slowing down. Recently, we've seen big players in traditional finance like BlackRock and Fidelity starting to seriously explore crypto. This isn't just some side gig, it's a sign that digital currencies are becoming part of the mainstream. Plus, more countries are rolling out regulations like the EU's new MiCA rules, which could make crypto safer and easier to understand for everyone involved. Then there's tokenization, the idea of turning real-world assets into digital ones on the blockchain. This could be huge. And let's not forget the Bitcoin's halving event, which happened in April of 2024, which has historically pushed its value upward. So, while there's still uncertainty, it's clear that crypto isn't fading away anytime soon. Looking at the recent moves in crypto, it seems like the space is gearing up for another surge. With big names from traditional finance embracing digital currencies and regulatory frameworks getting clearer, crypto's future is looking more stable. While the road won't be smooth, crypto's ability to adapt and grow is undeniable. The question isn't if it will rise again, but when. The rise and fall of crypto empires has taught us one thing: volatility is the name of the game. From massive gains to gut-wrenching crashes, crypto has always kept us on our toes. But through it all, it's shown that innovation and risk go hand in hand. The real takeaway? Those who are patient and informed might just navigate these ups and downs successfully. As the space matures, the opportunities may outweigh the risks, but only time will tell how this next chapter unfolds. And that's it from us today. If you enjoyed this video, make sure you hit that like button and subscribe for more videos like these. Thanks for watching, and we will see you in the next one.